Hi, everyone. This is Jackie Cooper with the Blockchain Legal Institute and also the Crypto Blockchain DeFi Conversations. I want to welcome everyone back to this episode and this conversation, and I'm very excited to be speaking with my two guests. Some of you who have you've been following the stream with the conversations from the Crypto Blockchain DeFi Conversation Cruise, you might be familiar with these visionary thinkers. But if you are new to this conversation, then I'm going to have each of them introduce themselves so that way you can understand about their background and how they are really supporting our community. So Anthony and Jack, welcome to the conversation. I really appreciate your being on. Who would like to introduce first?
Why don't you go ahead, Anthony?
Oh, okay, sure. that politeness right there. Appreciate that. Hello, everybody. My name is Anthony Howell. I'm the overseas representative for the government of Bermuda, stationed in Washington, D.C. It's an honor to always be here, and I'm very much looking forward to our conversation today.
I'm Jack. I've been in Web3 since 2013. I got into this ecosystem via Bitcoin, and very early on, I recognized that we needed something like stablecoins. So that word wasn't coined yet in those early days. So we were calling it e-money, e-tokens, smart money, all kinds of stuff. But essentially, my company Arise, we predicted that stablecoins would happen and that everyone would want to have their own stablecoin. And now we're seeing, Banking Circle and Solana, and DWF, and many participants are launching their own stablecoins. So Arise is offering that, stablecoins as a service. Essentially, you can subscribe to your own stablecoin with us.
So I appreciate both of you being on here. Anthony, I'm going to start with you first. And I know that Bermuda is a leader in this area of regulation and of blockchain and digital assets. We're talking a little bit about stablecoins here. Where do stablecoins sit within Bermuda and within the regulations? And if someone I know that Jack's company is overseas, but if someone wanted to come and create something, what would be the process if someone was approaching looking at Bermuda as the place to be?
Absolutely, yeah, no problem. As you mentioned, Bermuda's become one of the leading regulatory jurisdictions in the world when it comes to digital assets and digital finance. We started the digital regulatory process back in 2017, and in 2018 we passed the DABA, which is a Digital Asset and Business Act, excuse me. And we have basically outlined and defined the aspects that are required within the industry itself. Many jurisdictions have not been able to clearly give definitions for stable coins and other technologies within the frameworks, and Bermuda has. And so we're very proud of this. And what this allows us to do is actually be that drawer and that beacon for those companies that seek regulatory guidance and actually seek that definition in order to operate. And so many companies have chosen Bermuda as their jurisdiction to base their companies out of in order to have that guidance that's necessary to operate. And so what we've seen with stablecoins, for example, it is written within DABA. It's licensed to do the whole process. It's a very interesting process because it's very straightforward, but it does require the regulator on the island, which is the Bermuda Monetary Authority, to look at a company and its operations and to ensure that they meet the feasibility requirements that have been outlined by our regulator, because we have one regulator on the island. And one thing Bermuda is very proud of, aside from our innovation and forward thinkingness, is our reputation. And so we want to ensure that companies are of high repute and they have the ability to operate within the space. One thing we want to do is make sure the space and the industry is protected. We don't need fiascos that bring down the entire industry, because, it's not good for anybody. And, this has become a very large talking point in today's discourse, where we have seen in other jurisdictions who do not have regulations very fearful of maybe companies that have nefarious means or scammers or what have you, people who don't understand the space and wanted to protect it from that standpoint, but not having the regulations. But we found when you have strong regulations and you have a strong regulator and you have the principles in place, you can ensure that bad actors don't enter the space. And so that's how we've kind of characterized it that way and the approach in that perspective. And we have seen that the companies that we deal with are very sound and stable. They can operate within the space with no issue. Typically, the process goes, people can reach out to my office or any one of the Bermuda offices or law firms on the island to have a further discussion. You can go on the Bermuda Monetary Authority's website, and it's bma.bm. You can go and check out. They have a full list of the entities that are on island. They have the step-by-step process. We have business development agency that also has a step-by-step process, and more than willing to have those conversations and dialogues on how to do the approach. Typically, it could, depending on how big the company that is coming to Bermuda is, it could take a few months. This is usually just a back and forth between the legal representative in Bermuda and the regulatory authority, vetting the entire company, doing that process to make sure all the documents and files are up to date and presented. The idea is presented, and then once that happens, typically a company will receive, if they get to go ahead from the BMA, a license to operate. The license does vary; it's tiered system. We have 3 tiers. We have the test model, we have the modified, and we have the full license. And so depending on the revenue, depending on how large the company is, or depending on how innovative the idea is, one of those licenses may apply to the company in question. And so again, that'll be determined by the BMA who make that determination. And then you can always move up and scale as well. So for a company with a very unique, innovative idea that hasn't been seen, that's using a test market, a test license would be the most applicable for them. And once they scale it into over a certain time frame, then they can be eligible for a modified license. And then beyond that, it goes even further, they can get a full license. We do have some companies that are very large and have gone through the process with the BMA and have been granted a modified or full license right off in the beginning. And so this is how we create a nice system that encapsulates the best avenue for companies that are in the space and what they're looking for and what's going to be most apt for them as they go forward. Outside of that, we are very forward operating jurisdiction in the space. We do have conversations with other entities in other jurisdictions where we either create aligned frameworks or we have conversations about each other's frameworks. Our regulator, they go into different circuits to have the discussions with people, to present at conferences. I myself go to conferences to present, to highlight Bermuda's role, and then find ways in which we can in essentially coalesce and work with other jurisdictions that want to make sure the industry is well protected and safe.
Yeah, no, that it's definitely all encompassing. Jack, I know when you're creating your stable coin and your business products, you probably, and you do look at a variety of compliance rules, especially when you're consulting with clients. What have you found in terms of your area, in terms of where you're located? Is it similar to what Bermuda's doing? Is it more complex? You want to share more?
Yeah, we decided to start a crypto company on the hardest place on planet Earth doing crypto, Denmark and Scandinavia. Not only because law has been kind of cemented already and it's very hard to change it up. So Denmark and Europe are not first movers when it comes to new technologies like that, and especially not when it comes to regulation. So Arise, we were early in our kind of thinking of stable coins, and we thought that we can't just stand still and wait for Europe to adapt and get ready. So we utilized the world as the big place it is, and in our case, we created a BVI subsidiary, which was fine for our needs, and the industry it was decent. And now we are looking at bringing things back to Denmark and issuing from Europe with a pending MiCA application, of course, markets and crypto assets. Finally, we had kind of regulation and law put into place, but it's not great, but it's good enough. And with that, I think that we can do some business from Denmark. But there was a reason why companies like us, we looked elsewhere, uh, whether it be Bahamas or Bermuda or BVI or Isle of Man, or within Europe even, you got Malta, you got maybe Liechtenstein or Switzerland. So there are these hubs that do things differently, and I think that when it comes to crypto, it was important for us to find a jurisdiction which was agile enough for us to keep on being creative. We couldn't just opt into whether, say, the US Stablecoin Act or BCA or whatever it was, because it was still too much in its infancy, like giving yourself handcuffs on while you're trying to run through a forest. And so we said, well, let's do it where others in our sector have done it successfully. And we looked at different options, Bermuda as well. Differently from Bermuda is that over the last year, maybe I've been hearing more and more about Bermuda. I don't know if, well, I assume that's purposefully done, but it seems like I'm hearing more and more companies using Bermuda. And I must admit, I have not re-looked at our setup enough to reevaluate the changes. But look, we're in crypto, we're global, and we're not just going to have one foothold or presence in one place. We will operate globally and act accordingly. The world is a big place, and I would suggest to any entrepreneur in Europe or the US that you don't need to necessarily be there. Like if you want to be there, good on you, right? But if it's more trouble than gain, then the world is a big place. For us, BVI has been great. We issue tokens from BVI and we manage the underlying funds from Denmark. So there is a clear separation between the two companies, even though they're both called Arise. The BVI company is 100% owned by the Danish company, but this has enabled us to kind of tap into the capabilities of BVI, yet maintaining the trustness level that you would from Denmark. And of course, then we audit everything monthly. Grant Thornton is our auditors. Our accounts are entirely separated, segregated, no commingling, all that stuff. So no need to think of offshore as being a bad thing. The world is a big place, and we can do tons of good stuff from different nice islands.
So, Anthony, I'm going to pop back over to you for a second because Jack mentioned Mika, and we are talking about crypto and stable coins, but we're talking about just also the trends that are here. How's Bermuda taken a look at where the regulations are in other locations, and then maybe adapted or taken a stand that no, this is what we're going to be doing, which is different. What's been the take on everything that's been going on overseas?
Sure. And this is going to probably echo a lot of Jack's points, and you make excellent points. The world is a very big place. As the one thing we have noticed is that as the fear, as people, as the unknown becomes more known, I think that's the best way to call it, because in the beginning, a lot of people were very unsure. It was very niche. And now we kind of see how the market has developed, in which blockchain technologies, digital assets, digital finance is becoming more incorporated into daily life. How different businesses can adapt to it and adopt it into different aspects, and how it can impact people and businesses. And so as this veil of shadows is kind of being removed, we see a lot more places that are trying to make adjustments to their regulations to find a way to incorporate it in order to either define, to allow companies to operate. And we've seen that with many jurisdictions. As I said, Bermuda did it back in 2018 with ours. I know a few were right around that same point as well. We've seen, like with Jackson with BPI, we have seen Bahamas. We've seen Dubai and Singapore, Japan, many different jurisdictions that are trying to adapt. Now, of course, it doesn't always translate into effectiveness if it's not done correctly, as we did see with Bahamas and FTX. And then we see the ripple effect, how that actually impacts the industry. So that's always the clear distinction when we look at who we engage with in terms of conversation, and just to protect the industry and make sure that what we do is not going to have a negative impact reputation-wise, island-wise in Bermuda, and then globally. From that standpoint, we do assess different regulatory matters from different countries. We look at Japan's model, we look at Singapore's, we look at Switzerland, we look at I was going to say the U.S., but they're what they're doing, what they're trying to do, and Mika as well. And so we kind of broad stroke and we see where the gaps are and where our strengths lie in, and then we kind of take a look at what do these models offer that maybe we don't offer, or what are they doing in which we can have an idea to improve, and this is vice versa as well. There have been numerous jurisdictions that have utilized Bermuda's template and have brought it over to their own jurisdictions as well. And so because there's no copyrights or anything involved. You go on our website and and look at the legislation. The same way we can look at Mika's. And to your point with Mika, I did have a conversation. I spoke recently at another event, and I had a conversation there. And the idea that I was brought forward to me was the fact of Mika being a very encompassing model of legislation that's going to revitalize, revamp the industry. And although I understand what they're trying to do, it's part and parcel of the fact of being able to pass such a massive legislation. There's a lot of gaps in Mika, and that's the unfortunate part. I believe this is the kind of industry in which I think it very much caters to being streamlined. Being that we have one regulator, it's not a lot of back and forth. It's not a lot of delineation in terms of outsets and what the expectation is. And this actually lends a lot of ability to being very flexible. Excuse me. Excuse me. Ooh, saying, oh, sorry, I'm just getting over. I was a cold. Excuse me. It's allows us to be very linear and very innovative. Allows that flexibility and adaptability, and that we've seen the U.S. struggle with because you have many different regulators. It becomes very difficult for there to be a unified progression forward. Mika, in its virtue, has kind of codified it, within a system where you have one directive, do a legislation piece. The unfortunate part is you have so many different countries and so many different regulators that make up the cohesive unit of it, that there's a lot of different voices, and the individual countries and regulators are gonna have to make their own adjustments necessary in order to see things forward. So, in my opinion, doesn't define everything clearly enough, and then at the same time, it's still too many voices in the room, and it's going to be too many countries going to have differing approaches, staying within the overall framework of the actual MiCA legislation. And so it does create a bit more guidance, but it still lacks the cohesiveness that like Bermuda has, or maybe another jurisdiction has. And so that's the takeaway I have seen with that so far in our conversations. And unfortunately, even people who were very pro MiCA, who in my conferences that I attended, that I had this conversation with, when we started talking in more detail about it, even they started acknowledging there's still a lot of faults and a lot of issues with MiCA, to the point where other jurisdictions who have streamlined regulatory frameworks have them outmatched and outpaced.
So, Jack, have you found it difficult to follow the MiCA guidelines within the industry that you are in, or how are you navigating that?
Yeah, everybody has, because it's like Anthony says, it's all encompassing. It is they're putting everything together, whether you're a custodian, or an exchange, a platform, a stablecoin issuer. If you're like, it covers. It is trying to cover everything at once, and it does so with the attitude of crypto 2017. This is a stablecoin, this is a wallet, this is a blockchain. Where in truth is that these are kind of, I like to use this word, but it hasn't really cemented yet into becoming these specific things. And MiCA, in my opinion, it's going to hinder creativity, and it's going to hinder innovation, because in order to even try out something, and even to try utilizing these different technologies that are now available in a tech stack, you're not at liberty to kind of do what you want you have to do what is written, and sometimes what is written does not match what you want to do. Right? You can't write a full prospectus if you're an NFT artist. You can't have an e-money license if you're issuing settlement tokens for shipping and trade finance. It's a different. These things are different, and that's also why I agree with Anthony that looking at other jurisdictions which are more lenient in their kind of what they allow you to do, and maybe have different tiers where they say, well, once you're this big, you get the big license. Which if you're this big, you get that license. Where with Mika, it's kind of similar. Whether what kind of business you are, or if you're a new concept, you just have to comply. Now, for Arise, we have done things for so many years that we predicted many of the things in Mika, like over collateral, separation of assets, proper permissions, KYC, AML stuff. All the things that you kind of got to do. We looked at that early on, so for us, it was not the biggest challenge in the world. Well, we'll see. Right, we have a pending application. We'll see what Denmark says, because again, as Anthony says, it's very much up to the individual countries and how they want to react to Mika and how they want to implement Mika. I don't want to be in Denmark and Europe because of Mika. I want to be here despite of Mika, because the other values that you would get from having a Danish DNA. I mean, we don't have to go and tell people about our properness and our inclusivity and all the good stuff we do. We're Danish, of course. We don't have to preach about freedom of religion or freedom of this and that or equality. No, we're Denmark, of course. So there's so many values that you kind of opt into by having a Danish DNA, as we see by many other large, successful Danish Scandinavian companies. We can tap into that level of quality and assurance. But of course, that also means that you got to do things right. When Arise did our first ICO back in 2018, 19, during the whole ICO crash, we wrote a full prospectus. We sent it to the Danish authorities. We only invited 150 accredited investors manually, one at a time. We followed ancient laws. And we did so because of the respect that we have for doing it the right way. And with the attitude of, well, if we do it right, nobody's going to stop us. I like to use this. My colleagues don't like that I use this at all. But you can either sell drugs and you can be like an Escobar level, right? Or you can be a big pharma rep and you can sell as many drugs as you want. In one case, they will stop you, right? In one case, the sky is not the limit. But if you work for big pharma, there's no limit. Do what you do, right? Just do it properly. You can sell drugs, just sell drugs properly. And in the same way, you can do crypto stuff. Just don't be a madman about it. Don't be a crook about it. Use it for what it is and do it proper, because then the central banks will be your client. So, building CBDCs or stuff like that. I don't know how popular I'll be for using that expression, but I think you know what I mean, right?
I think we do know what you mean for sure. So, Anthony, going back to some of the things that you shared about the 3 tiers, it sounded as if there is a level and a mindset of creating a sandbox for development within the 3 tiers. Did I hear that correctly? Or I know there's regulation, but there seems to be the ability to kind of see how to kind of craft something and then take it to the next level.
Well, yeah, exactly, and that's again that points to the innovativeness, and Bermuda it sits in the crossroads of having the ability to be very flexible. And I think that's one of the interesting matters, because every industry that we target or we look at, we have to essentially find the best ways to stand out. It's easy for a small territory to get overlooked by big names. It's ironic paradox, because as stated before, Bermuda has been in the industry since 2018, and as Jack pointed out, he's now hearing more and more about Bermuda, and that's been 7 years now. And to the point where even Bermuda's regulatory framework was copied by other countries, which is interesting. But again, we stay the course. We look for the ways in which is going to be the most benefit. Most benefit to the companies, those who are starting the companies up, or who have, as Jack said, an issue with another jurisdiction or their regulations, or just wanting to broaden their footprint, and choose a jurisdiction that has the availability for them to operate in without a headache. Nobody wants headaches in business. It's one of the worst things you can have. And so we have developed this tier system, and the lower one is the test model. That's the one in which a product that has not been proven before, or is very small in scale, they can get that license in order to actually test it out, to work out the bugs, to work out the kinks, to make sure that it's viable, to make sure that it's going to work as it develops and scales up. And that's what I said before. Companies that come and get the test license after a certain duration of time and scaling it up can then be approved for a modified license by the regulator. And so it in fact works as a sandbox in that way. We have companies that have test licenses. They're able to be in a place where they can, without regulatory unknowns, they can actually operate within this fine space, and they can work on their product to make sure that it's going to be able to be scalable on a much larger a portion, to whether they want to be a global outreach or regional, whatever they choose. But it does work in that space.
So Jack, I know that and I'm going to bounce it back over to you, Anthony, in a quick second. In one of our other conversations, Jack, we kind of defined and talked about stable coins. For those that might be just listening to this without listening to some of our history conversations, why don't you go ahead and define what is a stable coin? And so that way people have a better sense as to the framework that I want to ask about next.
Well, stable coins, in my view, are essentially cryptocurrencies that follow another asset, or is backed by another asset. So like digital dollars, digital gold, ownership of 1 tons of bananas or apples, like we talked about in the other call. It depends on the issuer. If a central bank issues it, it's a CBDC, a central bank digital currency. If a bank issues it, it's often called a tokenized deposit. Technologically, it's the same thing. It is a cryptocurrency operating on a blockchain, which is issued by an entity that guarantees its value, and they can do so in different ways, either by proving that it is backed by what they say it's backed by, or they simply make it a company kind of promise. You trust the company, kind of like a bank. You trust that $100 in the bank, that they'll meet their obligation. It's not like they got $100 lying in a vault somewhere. So there are different iterations of these so-called stable coins. I like to call it smart money, or saying making dumb money smart. Because for Arise, it's not about making a new kind of cryptocurrency, there are millions of different cryptos out there. We want to take what's already there in the real world and make a smart version of it, like e-euro, e-dollar, e-pound, e-gold, e-real estate, e-oil, e-silver. That's that attitude. Making a token of something means that it is now accessible by other participants in the network on equal footing. Whereas if you make a digital version of gold with a broker, then of course you still have the traditional TradFi rails and compliance measures. With blockchain, you have an infrastructure which should be accessible by all, right? So the nodes in the network, so the clients connecting to the network, they are just numbers. It's not Jack and Anthony getting a bank account somewhere. It's us accessing a technology. And this then means that blockchains, they offer a trustless way of transacting trusted assets. So you can have a JP Morgan coin and a Venmo dollar and a Netflix euro, where none of these three companies they trust or like each other, but they could still have instant settlements or native interoperability between their protocols and their rails, because you have this common denominator, the blockchain, which is similar to how you can send emails from a Google email to a Yahoo email or to a Microsoft email, because they kind of speak the same language. That's why tokens or stable coins, in my view, are not stable coins unless they live on a blockchain. I like to say that is one of my requirements for to call it a stable coin. Otherwise, we can call it anything else. But it must exist on a blockchain. It must be kind of trustless and fungible, meaning it must work across other applications on that blockchain. You cannot just have a Jack coin, which doesn't do anything on the network it lives on. If you have a Jack dollar, a Jack coin, a Bank of America dollar on Ethereum, well, it should then work inside of the applications on Ethereum. And that's the whole point of having it as a token and not just as a database entry where I write here Jack has 100 Jack dollars. Now, once it exists as a token, then it works across the lending protocols, the different exchanges. It speaks the same language as the next coin and as the next coin, and it's as safe. So suddenly I can make a token and the Danish government can make a token, and my token and their token are technologically compatible, which is very unique compared to if we made a fintech wallet and the central bank made a CBDC, then those two would not natively connect and speak the same language. You would have to combine them in some way. Whereas if it's a token on a blockchain, then it's natively interoperable with the rest of the ecosystem. So really in Web3, the tide rises all ships. Any project on Ethereum contributes to the next project on Ethereum. And that was a long rant for what is a stable coin. Did we lose Jackie?
Did we? Jackie?
I think she's back. You're back?
Yes, we're back. We're back. The beauty of edits. I don't know where we kind of made the pause, but I liked where you were going.
I think the recording got all the Jacks. I think he got all his stuff. So
okay. Okay, I'll definitely do a quick edit on this. So hopping over to you, Anthony, in terms of, for those that might not be familiar with Bermuda and the companies that are there stablecoin companies located in Bermuda, and also if a company wanted to come, I know we talked about the 3 tiers, I guess they would go through the same process.
Yeah, absolutely. We have them. And again, it just depends on the kind of company that's looking to come to Bermuda, how well established you are, the outreach you have in terms of capacity for global interaction, or is it a new technology or new, issuing, a stablecoin that's untested. It really just does depend on the company itself. But yeah, we have the regulations. It fits within our DABA. We continually do assessments. We have I sit on a couple of the different subcommittees that deal with different radiations of the Digital Assets Act itself. So I sit on like the digital identity and the DAO working group. So that way that we can keep focusing on how the technology, how the regulation incorporates technology, or if there needs to be new technology and new laws implemented to cover new technologies as they develop. And so this is how we stay very flexible, and this is how we stay adaptable, is by having professionals within the industry itself be attached to certain working groups or subcommittees or committees that have this inward look who understand the regulations and understand the legal aspects, who understand the technology, and are then able to discern in what direction it's so either new legislation be crafted or current legislation be changed into to adapt to it. And so this allows large companies and small companies, as long as they meet the requirements set by the regulator, to come to Remita to apply for an application, to present the documents necessary, and if passing everything, get licensed. In one of the three categories.
So, Jack, with your navigating, looking at various trends in around the globe, where do you see the next community that might actually be picking up this area of stablecoin? Is there a certain geographic area that might be seeing this as a win for them because of supporting their fiat, or because they might have minerals or other real world assets that might benefit them? Where do you see this application that you've created kind of going in different communities?
I think that it's going to be like a pyramid. In the bottom, you're going to have DeFi, or the decentral apps. So the dexes, the lending platforms, the different on-chain stuff, the one that drives the entire kind of ecosystem. Then you have Web 2, which are kind of the fintechs, the banks, the neobanks, the brokers, the FX markets, and whatnot. And then in the top, you could say, the application layer, where you have the corporates or real companies around the world that utilizes Web 2 and Web 3. So for Arise, we are now launching stablecoins for DEXs and for blockchains. The ones in Web 3 that know that they need this. We're also seeing a lot of interest from Web 2 players, kind of like PSPs, like payment service providers, more traditional money transmitter companies that are both using stable coins but also wanting to have their own. And then the last step is banks. Here we saw Banking Circle, for example, launching a euro stable coin, and was the JP Morgan was quite early on with the JP Morgan stable coin. I think that the ones in the payments infrastructure will start using it first, so that when it comes to remittances and cross-border payments and trade finance and different industries, it becomes kind of a go-to solution that you don't really think about using. So when Red Cross does international payments, or when Maersk handles international shipping, they will obviously use smarter and smarter technologies for their payments, and blockchain and stablecoins will absolutely be a part of that. For us, it's more interesting now to make like a Aave dollar, Uniswap dollar, blockchain native stuff, because any good company or any good project that uses a blockchain uses the same blockchain as we use. You can make your own, sure, but if you want to take advantage of the interoperability and the trustless nature of blockchain, then you kind of have to use the same blockchain as the next one. So we believe that if we can deliver these technologies to the blockchains, or the dApps, the decentral apps that builds on the blockchains, then they have what they need in order to consumer face further in the application layer. If you wanted to send money from Danish app to PayPal, PayPal have PayPal dollar now. So if we had like an e-krona, Danish krona in Denmark, you could imagine how this coin and that coin could be combined, so that I can suddenly send money to my cousin in Armenia via my app, as she receives it in PayPal in her app. That's the outcome of the work that we're doing now by getting into the infrastructure. So I would make it like a 3-step plan. My mom, she started using ChatGPT after it worked in her Snapchat. She could chat with the Snapchat bot, right? But it had to be made palatable for her to access. Then she started accessing it. Like my dad started doing crypto stuff because Revolut had crypto functions now.
Yeah.
I think that's the step, and Revolut has it from whatever Wintermute, and Wintermute has it from whatever they have it, and then you have the layers that make up the tech stack that makes it so my mom can just swipe a button or speak to a robot, or do whatever she does.
No, you're right. The accessibility to these tools make it more adoptable and friendly for those that might not want to be thinking about, like we've talked about before, the engine that drives the car. Anthony,
Or
I
we
know.
deliver an X USD to Twitter or to Elon, and we have like X euro, X dollar, X gold, X whatever, and then everybody on Twitter gets a wallet overnight. I mean, technologically, operationally, there's very little preventing us from thinking like that. So it can go real quick, real fast. But yeah,
It can go real quick, real fast, but then we're going to need individuals like Anthony and the governments and the regulators to be thinking about, okay, how do we protect the consumers to verify what those wallets are? Are they the real thing, or are they the spam, or they're the fakes?
mm.
So, you
Yeah,
know,
that's always
Can we just ask the NSA? They've been spying on us for the past 20 years. They know who's.
well, I mean, so it always should be the main priority of the government is always to protect consumers. But at the same time, like Jack, as you pointed out, we want to make sure that operate in a way that's not going to drag down the innovation, slow it down, or cripple it, and make it, technology is going to keep advancing and developing. So it's best to put it within a way in which everyone benefits from it, rather than just trying to shut it down completely.
Yeah, the world is a big place. I mean, we can move elsewhere, and that's why Dubai is attracting so much attention these days. And the world is a big place, and we want to create something safe, and we want to protect investors, of course, but we also want to have innovators innovate
Yeah,
uh, and take chances, right? I often
absolutely.
I often say that we need to regulate the regulators, because what happened with the regulators that gave FTX their bid license, right? Or like nothing happened, nothing. For years they were just literally doing drugs in a penthouse and gambling people's money, and they were just permitted to do that with nobody telling them no for years and years and years. So maybe, Anthony, yes, as you said, maybe let's have some regulators who actually understand what they're regulating, get some technical people involved. I know that in Denmark, they've hired some tech folks. They've even got some of my folks, and it's just, I think that's good. Get some people who know what they're talking about, and maybe you can do something more modern and agile than Mika, because Mika is not the reason we stay in Denmark. We stay here despite of Mika.
Yeah, absolutely fair point.
Anthony, I know there's a whole nother industry that is based in Bermuda that I'm curious as to if you've heard any, I guess, rumblings as to how they're addressing this, and that's the insurance side. I know that there are some insurance companies that are looking at the supporting the companies within the cryptocurrency business. But where's the can you talk about the insurance community and their view of maybe providing this backup support in case of malfunctions, maybe not the right word, but an area where there's a need for insurance?
Are you saying? I'm sorry. Just for clarity, you're talking about insuring the crypto companies in crypto space, or their operations within the crypto and digital asset space?
Either. I mean, I know that there are some rather insurance companies based in Bermuda that are providing looking at insuring from the crypto perspective. But I know products are always being discussed and talked about, and is that an area that you've heard protection of?
Yeah, and I'll speak to the engaging within the space itself before talking about insuring in the space. I go to different insure tech events, And it's interesting to see the insurance. And insurance is such a massive industry. It's interesting enough, even though I'm from Bermuda and all, and having worked in this space, I didn't appreciate how big it was until I did some internships within the insurance industry, and I saw everything they covered. I think it has a lot to do when people think of insurance, you kind of just think of home insurance and your car insurance, your health insurance. I think that's kind of really it. But it delves into so many areas of insurance, and to the point where one of the biggest markets for Bermuda is the reinsurance, which is the insurance industry that insure the insurance industry. So it's from that standpoint, one thing I will say is that it is a legacy industry. So it's a lot of money that goes in and out, and it has to be very careful how it progresses forward. And so it's kind of to the point that I made about removing the veil and the shadows within the industry and seeing in what ways can technology be adapted to benefit people, and of course, make sure that you do it in a way where the consumer is protected. And so we do see a lot of insurtech companies that are coming out now with different ways of minimizing costs or looking at different ways to streamline the insurance process, whether that be AI chatting with AI representative of the company to find an insurance claim or file an insurance claim, or to inquire about transferring insurance, or text modulation, which streamlines the process between a person and finding the best compatible amount or insurance amount or coverage that's going to be the best fit for them. Um, and so it's interesting to see how the technology is modified to be able to adapt to the insurance companies themselves, and to see the insurance companies look at these different avenues and seeing in what ways can they assess and take the technology and apply it to different aspects to make it a better experience, to make it more cost effective, and to within a way of protecting the consumer. I can't speak for actual adoption because I don't work for the insurance companies or the reinsurance, but I do have conversations with them, and I do see what the industry looks like. The big conversation has been now on insuring in the crypto space, and that is something that's very interesting. And again, I can't speak too much because these are very uh, corporate matters that the insurance companies they would have to assess and look at. But I will say that it has come up on questions have come up on our radar before when I've been in conferences or speaking with people, or just in general when we see people say you have, for example, FDIC insurance from a bank. From the outset, do you see an insurance market for crypto protections? I can't actually answer that question. I'm sure there is probably a way to do so. There's a way to do almost anything. I guess the question now becomes, and I think this again really piggybacks off of what we've seen previously in the industry of people with nefarious means to take advantage of the system. And so we've seen with cryptocurrency being utilized in scams right now, with people getting blackmailed, or companies having their data having data breaches, and then people demanding to be paid in some type of cryptocurrency, Bitcoin or what have you. It's much because again it's a little bit outside of certain realms. I'll talk from the federal side of the United States. We've seen with like the FBI, for example, stating that, with certain transactions, it's beyond their jurisdiction, or it's very hard for them to find and trace. A little bit easier if you're doing a bank-to-bank transfer with utilizing, dollar to euro or what have you. It's easy to kind of track these kind of activities. The Bitcoin or other cryptocurrency becomes a bit harder to do, and so this always raises concerns and fears going forward for protecting the consumer. So I guess from that standpoint, if you look at it in a linear sense, can this be insured in the same way a bank deposit being insured in a U.S. bank by the FDIC? On the other side, I don't know. I'm sure it probably could, but there'd have to be a lot of different regulations put in place. It'd have to be a lot of guidances and step-by-step case basis that have to be assessed, because again, we could possibly see where people as you see now, or even these large companies getting breached or scammed, and then a lot of money would have to be paid out in order to cover it. And would that raise insurance premiums or what have you? There's a cap limit. There's a lot of questions, and probably a lot more questions than answers at this point. But it is something that has been brought up, and it's something I think many are looking at to examine exactly how this can be solved. And when that timeline looks like, I don't know, but it has been definitely a topic of conversation.
No, I appreciate that, Jack. As a business person, what sort of insurance have you been asked to have? Traditional, or maybe are there other riders or policies? I'm curious as to how how this might be extended, and what you have faced, because sometimes even those that are stepping into the space don't always think about both they're creators of a product, but then there's the business side too. So what have you found, especially because of the type of business that you're in?
Yeah, we have the traditional insurances that you need as a company, right? To employees and fire and all that stuff. I assume that's not what we're talking about here. But to draw a parallel to FDIC insurance, or in Denmark, we have something similar in indskyderretsgaranti. Why do we have those? We have those because banks, they live off printing digital money and taking risk. That's the whole business model, right? And in order to allow them to continue to do so, we need to create something that protects me and my neighbors, right? So we all chip in and cover the expenses related to insure us, or rather our money, because banks, they take it and give it to the next. So there is a need for insurance in that setup. But in Denmark, for example, you have you covered until 100,000 euros. If individuals, businesses are not. So if you're a corporate account with money in the bank goes away, you're not insured. You're not protected. So in our case, well, you could say, why do you need the insurance on the back end? Why do you need FDIC insurance? Because the money is not there. But what if the money was there? And it was so much there that you proved it real time, and you didn't prove it, but companies like Grant Thornton and trusted auditors proved it. And if you can prove it, that it's there to such a degree that you also prove that I can't move it without this action happening, or I can't mint more if this action happens. If the setup is good, why would you in that case need to insure?
Exactly.
So I saw some stablecoin issuers, I can't remember the name of it, but it said we have insurance up to $100 million, Lloyd's something. But when you read the terms and conditions, it's like, yeah, sure, they got that insurance for all the tokens they're issuing, and it's only a part of it that's this and that and this and that. So in the end, they're there to make money, the insurance companies. So if you need to insure, how can I say, if you want to insure against fire, there's a risk of fire, right? You don't need to insure against fire if you're living in Greenland on a lake. There is no fire. So sure, we can insure, but what is it that we are insuring, and why are we insuring it? So for Rise, we're over collateralized, fully backed by short-term bonds. We take no currency risk exposure, no counterparty risk. We don't do anything risky in the backing of the fund, of the e-assets, the stable coins we issue. So I would not want to pay a lot of money to get that insured, unless it was like a marketing thing, a gimmick, just to say that we have it. So it's more important, I think, to know many of these DEXs and DApps that get hacked, they're not insured, but they fix the hack very quickly. And then it works again. And then after you've done that a few times, sure, you've lost some money, but man, your setup is quite resilient now. And what we have done is we have learned from others who failed. Like, what happened with Celsius? Well, they keep on dumping their own cell token into the market without buying it, and then it lost all its value. All right, can we do it differently? what happened with Luna? What happened with FTX? Can we do it differently? I don't think that you can today insure crypto and keep its agility and freedom and its the creative aspects of it. If you were to if we were to insure the e-euro or something, then the e-euro that exists today will be the one that also exists tomorrow. We couldn't say, hey man, what would happen if we kept the over collateral in gold? Wouldn't that be fun? Hey, what would happen if we added this chain or that chain? What would happen if we included Solana? What would happen if, like, you sure, so you could take your thing, crystallize it and say, this is my thing now, and then try to insure it. But the thing here in Web3 is that even the thing we're crystallizing now is not, it's like more like clay. It has to be, or like soft gold. It has to be a little bit change. You have to be able to massage it and change it a bit. And I don't see how that could happen if we start looking at insurance in that way right now. Well, our insurance is that we do monthly audits by Grant Thornton whenever they want to do it, and every time they do it, we're back 1-to-1. That is us showing insurance.
So what I'm loving about these conversations, and I have one more question for both of you before we wrap up, is exactly what you talked about, both Anthony and Jack, in terms of the fact that this is a very fluid community. There's a lot of creativity, but there's and traditional focus that might not apply in our community, in the decentralized community. And so there has to be an awareness as when regulators are looking at this is what is the purpose of the regulation? And how can you, like both of you have talked about, how can you allow for both the consumer protection as well as the innovation that the entrepreneurs need, and understanding that you sometimes have a triangle and it doesn't fit into a circle. So again, the traditional approach might not always work. And so, in asking the question, I was curious as to cross application, but like you said, Jack, you already have it back. So the risk is maybe not there. One last question for each of you before we kind of continue on to the next conversation. What are the takeaways that you would like those that are listening to think about when they are approaching both maybe a jurisdiction to think about for their business to register and allow them to grow and develop, and or to understand how to evaluate the risks involved with the product that they might be investing in if you're a consumer. So either one of those questions, Jack or Anthony.
I'll start with that. Again, I think one of the key is to look at it's a few metrics, and I definitely would say one of those is the reputation. Reputation in terms of the industry in which the jurisdiction that you're looking at, how fluid they are and how viable they have been in the other industries in which they are a purveyor in. For example, with Bermuda, it's our reinsurance and insurance industry. Bar none, probably one of the strongest in the world, easily seen in that regard. And we've been stable in that industry for over 40 years. They have a lot of practice in the industry and have basically utilized what works and have transposed that into digital asset in our licensing regime, our regulatory regime, which is why it works so well in Bermuda, because we understood what we offered and how we can approach it. And we mirrored the success of the insurance industry when it came to regulations, in order to keep good actors in order to be adaptable and quick flex with it. And so transpose that into our digital asset regulatory framework and progress in that nature as well. The other, I would highly recommend also looking at the regulator. And again, this goes back to reputation. You want a jurisdiction that has a regulator that understands that the reputation and consumer protection means life or death for the jurisdiction you're operating in. For Bermuda, it's a small territory, 65,000 people, very limited in terms of industries that we have on the island itself, means that we have to pay particular attention to ensuring that our reputation does not falter. We stay very much well grounded in understanding that any disruptions could honestly really impact our industries. And so our regulator is very thorough with how they assess companies that come to Bermuda. They have guidelines that must be followed. They have their own assessments that they look at in order to make sure that we have good actors in the space and not bad actors. Because again, not only is it reputational risk, but it's industry risk as well. And we don't want to be responsible for another FTX, crisis. And then you see how that ripples, and you see with some of the banks like Signature Bank having failed later down the line, and things of that nature. And so we're very careful of how we do these approaches. So any entity that's trying to get into the space and the jurisdiction should look for the regulator, should look at the clear regulations. It should look at, and speaking of the regulators, just one more thing with them. Our regulators are the same ones who have been there since the beginning. We don't have turnover within our regulator. Might be kind of hard pressed to find that information for jurisdictions, but that's also a very sure way of finding a space that's going to be a great operator, because that means that the people who have the most experience are still there. Our legal firms on the island are very well versed. We have multiple law firms that have expertise within this industry, and these are from top down. From the partners in the firm to the associate members. Many have experience, so you want to go to a jurisdiction that has the legal experience, and those lawyers are also on different regulatory committees that help shape the legislation or help give suggestions to the regulator for how the approach should be. And then, of course, it goes to the legislators, who will then take those into consideration as either updates or new laws passed. And so then you want to also go to a space that has a great relationship with top economies. Bermuda is a well-respected jurisdiction. We have great relationships with the United States, the EU, Asia markets. Globally, we're very highly recognized. We follow KYC, we follow anti-money laundering and anti-terrorism financing laws, fully compliant jurisdiction. We meet some of the highest criteria when it comes to compliance. And so if it's a bit much, but if you follow those check boxes and you assess correctly that this jurisdiction has these boxes checked, and you're able to kind of have a company that fits within the no issue and has the structure that's going to work for them, then you are 95% of the way there.
A lot of information, a lot of great information. Jack, what kind of takeaways would you like to share?
I think Anthony said it so like better than I could have, and he's also more knowledgeable about it than I am. Very, very obviously, what I do as an entrepreneur is that I keep my options open. We are in Denmark, but we're not building for Denmark. We're building from Denmark, and might need a server farm in Ireland. We might need a development firm in Ukraine, might need a license in Bermuda. Luckily, the world is such a big place, but it's such a small place that we can kind of pick and choose depending on what you want to do. Of course, it might be easier taking something in your neighborhood. So if you're a European company, you don't need to go to Bermuda. You don't need to go to BVI like we did. Maybe you can look at your own country, or Liechtenstein, or Malta, Portugal. There are different places, but don't necessarily feel bound to where you stand. And also depending on what type of business you operate. If you're very US focused, heck, maybe there's a good reason of being in the US or being in one of the countries that share kind of legal frameworks with the US. There's also, not to be neglected. Now Trump having been elected, he says that he's going to do a lot for stablecoins and for Web3. So, some might see that as an opportunity to. I know we just signed a client who is building their own blockchain, and they are very US based. They get technology from us, a Danish company, to do what they want to do in the US. I would say, finally, if you get a no, don't take no for an answer. The world is a big place, and if your country is not up to date, there are other places that want to do what you want to do. Yeah, I cannot speak of which island or which nation will be better than the next. What I can say is that I try to keep a finger on the pulse and see what's moving and which nation is moving into a direction which resonates with what we want to do. Um, and I think that Arise will have 4, 5, 6 subsidiaries around the world, operate globally. Um, we're speaking with the government of Tanzania about a shilling project, and in that case, we would have a company in Tanzania, um, if that would make sense for us to do so. So it doesn't have to be one size fits all. And if you can, don't be in Europe. Honestly, I'm in Europe. Don't even go here. Like, just don't.
We
Uh,
appreciate your honesty.
I
Anthony, you're
mean, come Bermuda. I'll throw it in there. It's just throwing stuff out.
Look, man, it's been dark here in Copenhagen for the past 5 hours. It's cold. Just stay away. We don't need. No, but jokes aside, for those that do stay and those that do make it here, they become the Maersk, the Lego, the Vestas, the Novo. If you make it here, you make it. You make it big here. I'm just saying that it's probably not the place that I maybe would have jumped into if I were starting today. Maybe not, but you don't have to. That's just what I'm saying. The world is a big
Absolutely.
place.
It absolutely is. And just to piggyback off your point, Jack, it's interesting to see. It's refreshing to actually hear. It's the fact that, and I think a lot of people who are getting into the space may think you only have one jurisdiction you can operate out of, and that's not the case. We have multiple companies here in Bermuda that have a subsidiary in Switzerland, Dubai, and in Bermuda, and or the other islands, and it goes to your point of this. It's going to be different points where certain things make sense, where it's better to have operations in 1, 2, 3 different jurisdictions or 4 different jurisdictions as it allows. And I think that is a great way to put it and take that assessment into consideration. So very well put, Jack.
Yes, for both of you, I definitely want to thank you for being on and sharing, on a variety of questions. Such a great overview for those that might not have thought through the choices that they have, or the tech innovations that are occurring or are about to happen. And that's why I'm really appreciating this thread of conversations that we're recording, because there's been such a diversity of intertwining topics. And when you watch from the start to the end of this thread of conversations, you're going to see the knowledge of those that are on here, like both yourselves, and the knowledge that's needed for someone to navigate in this space, because it is a multidisciplinary space. And if you're an entrepreneur, you need a huge team to help you succeed. So I appreciate each one of you. And for those that are listening, definitely hop on to the next conversation, because there's going to be even more great thoughts, but also takeaway tips for you, both if you're an entrepreneur or as a consumer. So, so thank you both, and we will talk to you soon. Have a great day.
Thank you.